Myself Rahul Kushwa from SS Institute of Management Studies. Today my topic is equity research. Equity research introduction. Equity research is a professional are responsible for a product production analysis, recommendations, and reports on investment opportunity that investment banks, institutions, or the client may be interested in. The equity research division is a group of analysts and associates at an investment banking, sell side, an institution buy side, or an independent organization. The main purpose of equity research is to provide investor with a detailed financial analysis and recommendation on where to buy, hold, or sell a particular investment. Banks often use equity research as a way of supporting their investment banking and sell and trading clients by providing timely, high quality information and analysis. Division organized. If you are looking for a career in equity research, then it's important to know what is a fairly flat organization structure. Unlike the hierarchy in investment banking, the two main positions are associated with analysts. Unlike other areas of corporate finance, the associate position is more junior and the analyst position is more senior. Typically, an associate or a multiple associates work for one analyst who has overall responsibility for covering a group of company. Analysts are usually divided into industry sectors to cover a similar company within an industry. Most sectors have a lot of specialized knowledge required, so it makes a sense for analysts to stick to one industry where they can become experts. Some of the largest sectors in equity research include the consumer staples, consumer discretionary, internet, healthcare, energy, mining, technology, and telecommunication. A team of associates and analysts will usually cover at least 5 companies and could cover as many as 50. Depending on their seniority, the size of the company and the industry mode, see financial analyst guide. Analyst associates do. The main work in equity research is producing a report, ranging from quick updates or flash reports to in-depth, initiating coverage reports. Job of equity research associates or analysts is constantly in be published. Another big part of the job discussed below is financial modeling. Working in equity research can be compared to what's likely to be a university student. There is a lot of assignment or paper due with a very regular deadline, such as when a company releases quarterly result or announce something. The content of an equity research reports typically include industry research, computer trends, etc., management overview and commentator, historical financial results, forecastings, valuation and recommendations. Breakdown and equity research reports. The industrial research. In this section of an equity research report, there will be lots of information on trends and competition in the industry. This is where a framework where like Porter's 5 force art based analysis can come in handy to ensure that you have covered all the dynamic in the industry, including politics, economic, social trends, and technology innovation, to name a few. Management overview. It is very important for anyone considering a potential investment in a company to understand the quality of its management team. There is a place where equity research analysts can add a real value since they have direct access to a management on quarter conference call, analyze data site visits and other occasions. Unlike the individuals, they can ask a management direct questions about the business and to do an assessment of their competence and related data information back to the investors. Historical financial results. One of the core job of the equity research is to analyze the historical financial result, compare them to the guidance that is given or compare them to analysis expectation. The performance of a stock is largely based on reality expectation. So it is important for analysis to analyze the understand that if the actual historical results were below or above the market expectation. To learn the equity research skills has a financial analysis sources. Forecastings. The forecasting financial result is a more of art than for science. We have written about this extensively in our guides on how to be a good financial analyst as well as providing a breakdown financial modeling skills. To summarize the point in those articles, there are two main ways of forecasting, top down and bottom up. Top down forecasting looks at the industry first, size, growth, pricing, etc. Then determine how much market share the company is likely to have a finally worked down to revenue. A bottom-up approach starts with the basic driver of revenue, such as the number of customers or the number of units sold, and the work up to a revenue forecast. Professional in equity research have to forecast a quarterly data or whatever frequency to the company report semi-annually in euro. For more on this, see your complete financial modeling guide. Finance valuation. The only things that mode of an art that forecast is valuation. Valuation method takes all assumptions from the forecast and build on them with it more assumptions such as valuation multipliers and also discounted, both of which are very much subjective. Analysis is the equity research have to be good at financial modeling. May build a three statement model and DSF modes are other are required. Financial modeling take practices and we recommend a browsing of specialized professional financial modeling courses to be recommended. Recommendation. In the recommendation section in the equity search requests have to target or price target which tells the investors where they accept the stocks and attach it. In addition, these tools often make an actual recommendation to investor where they are should do the language. Buy, overweight, long, hold, market weight, neutral, sell. Otherwise, equity research analysis. Equity research analysis is the professional conducts equity research. They analyze and study the financial performance and the companies as well as industry. Types of analysis: buy side analysis, research analysis, sell side analysis, research analysis. Skills requires good eye of intention, excellent analysis skills, technical and financial knowledge, report writing skill, good communication, up to date knowledge. Job opportunity: insurance firm, investment banks, brokerage fund, mutual fund company, assets management companies. Hold matter degrees in the fine economic of statistics. Education, patience and skill, career. Fresh graduates join associates after 3 years of the experience. Get senior analysis. Role of equity research. The role of equity research is to provide information to the market. Lack of information creates an insufficiency that results in stock being mispresented with the over and over value. Analysts use their expertise and spend a lot of time to analyze the stock, its industry, and its per group to provide the earning and valuation estimates. Equity research is a key piece of a Wall Street analysis used by investors is large and small to make a better informed investment discussion in the stock market. Often research is funded by the institutional investors as big bases on the soft dollar. Depending on whether the market is a bull or bear, equity research has been begun to shift this lens of analysis and types of report issued. Research on bear and bull market. In every bull market, some excess becomes apparent only in the bear market that follows. Whether it is a dot com or organic food, which age has its minima, it is resort the normal function of the market. Investors rush to jump on the bandwagon or in the market over allocates entire capital to the hot sector. This hurt mentally in this section why bull market have funded so many times. Research in a function the market is influenced by this swing. In a bull market, investment bankers, media and investors pressure analysts to focus the hot sector. Some analysis into promoters of the market. Those analyses are the remain rational parameter ignored and the research report go unread. Equity research is changing. To discuss the role of research in today's market, we need to differentiate between Wall Street and other research. The major brokers provide a Wall Street research, typically where sell-side firms, both Wall Street and other research produce independent research firms, small boycott brokerage firms. This is the difference in the important. First, Wall Street research has become a focus on large cap, where a liquid stock majority of public traded stock. To remain a profitable, Wall Street firm has focused on the big stock to generate a highly lucrative investment banking deals, but also face the daunting task of cutting costs. Those companies that are likely to provide the research firm with sizable investment banking deals are the stocks that are determined worthily or being followed by the market. Other research is filling information gap created by Wall Street dependent research firms and boutique brokers. Firms are providing research the stock that being offered by Wall Street. This means that independent research firms are becoming a primary source of information on the majority stock, but investors decline payoff is because they don't know what they pay until they purchase. Unfortunately, not all searches what buying information can be accurate or misleading. These days, there is a great deal of research that is provided for a client via mail, even zero cost of the investment as per majority of them. Role of base research. A fee-based research is an increasing efficient market. The price gap between the investor who want the Wall Street is not likely to improve the research of the stocks. It is an important differentiation between the objective fee-based research and its operational. Objective fee-based research is similar to the role of your doctor. You may pay a doctor not to tell you to feel good, but not give his or her professionals and a truthful opinion on the condition. Legitimate fee-based research is a professional standard objective analysis and opinion of a company investments. Potential promotional research is a short analysis and a full of hip. For an example of this misleading a social media past of penny stock which will supply triple in a short time. Legitimate fees-based research firms have the following characteristics. They provide analysis not promotional services. They are paid at a set annual fees in a case they do not accept any formal equity. They provide a full and clear disclosure of the relationship between a company and the research firm so investment can evaluate objectivity. Companies that engage a limited fee basis form to analyze the stocks and trying to get information investment and provide a market efficiency. Such information is making the following important statement. It believes the shares and a vendor value because the investors not aware of the company. It is aware that Wall Street is no longer an option. It believes the investment potential can be stand with objective analysis. I would like to conclude myself that exponentially the market is changing by the day by day. The equity research has been believed that the fountain of cost will be decline, increase the competition, finance, secure lending, etc. Thank you.